Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody alive over on YouTube. Sag, what's going on? Fabian, what's going on? Good morning, good morning. As we always do, we break down everything that went on in the overall market, get everybody ready to trade for next week. We'll be talking about the overall market trend, sector analysis, industry groups analysis. We'll look at any stocks that anybody brings up and get everybody ready to trade. So without further ado, it's time for the Rapid Review. And I forgot to mention, we will be going over the space stuff. We'll be going over SpaceX and some of those rocket companies. So don't worry. Liz, what's going on? Hey, good morning. All right, you guys know the deal. Disclaimer: educational, informational purposes, not financial investment or trading advice. Read through that. Let's get started with the market direction. So I still have my market direction sitting sideways. You guys know about, I think it was Wednesday or Tuesday, whatever, I live streamed midweek. I kind of updated you guys on that. Exposure level, still looking at a fairly high exposure level, 60 to 80%, primarily because the overall trend is still up. We haven't started to make lower lows. We haven't really broke through the 50-day simple moving average. So we're holding some key levels, especially if you're somebody who has a position that's got plenty of cushion, that's behaving well. There's probably no reason to sell, which is why those exposure levels probably remained fairly high. Looking at the Webby 3-day trend with the interaction we had at the 21 EMA, caused us to go into a choppy phase. And then with the 50-day trend that I have, still in an uptrend, like I said, that macro trend still up. We're 2.49% off the highs in the S&P and 4.79% off the highs on the NASDAQ, and 52 days. Ooh, excuse me. 52 days since the rally. Index performance, looking at the week, we have the leader for the week being the Russell 2000 up 3.90%. We got the NASDAQ in second place up 0.7%, and then the Dow 0.66%. S&P up 6.65. But the big thing to really talk about is kind of the closing range for the week. You can see everything closing in the upper range for the week, almost in the upper quarter of the week for everybody. NASDAQ was just the one that kind of fell out for that. And then for the year to date, green on everything still. You got over 7% on the S&P, over 9% on the NASDAQ, over 5% on the Dow, and over 16% on the Russell. Small caps leading out the year. Moving averages. So a lot of interaction here on the moving averages. We finished off last week with the S&P below the 10 and the 21, but it was able to regain the 21 EMA. Very, very positive sign there. NASDAQ still seeing some resistance at 21 EMA. We will look at that on the chart to actually see that visually, but you can see here below the 10, below the 21, above the 50, above the 200. Dow reclaiming its 10-day simple moving average for this week, and the Russell also reclaiming its 10 and its 21 EMA this week. So broke through a lot of those kind of key moving averages last week. We basically finished off last week with everything but the Dow below its 21 EMA. And we were able to make some gains back up and get back above those key levels. So really, really positive to see that kind of action. Looking at distribution days. So we did have a lot of changes in distribution days. You can see we're now sitting at 4 on the S&P, 5 on the NASDAQ. We gained a day on both indexes on Tuesday the 9th. Distribution day was added. But the big thing with that added distribution day, it gave us the requirements to activate the 529 stalling day. So that's how we kind of, for those of you who maybe were a little like confused as to like how did we go from 3 distribution days to 5 distribution days in one day? Like, can you get 2 distribution days in a day? That's what we were talking about with those pending days. I'm not going to go fully into it, but you just basically can't have more stalling days than you have distribution days. So when the distribution day activates, that stalling day then activates with that. So we got 5 here and then 4 here. Going into next week, still not dropping anything off due to time. We are getting pretty close on this S&P 515, which will probably drop off the following week. And then in terms of price action, not really much that is likely to happen unless we have a real explosive week that's going to wash anything out to the price action. So look, a little bit high on the distribution. It has been a volatile market. It's not extremely alarming, but it's definitely a little bit of a concern. Just seeing that we're seeing some of this selling come into the market. This, for me, and I've said this before, is more of a secondary indicator. The price action on the actual indexes is more important to me. The key levels that we're looking at, the moving averages, and how the market's behaving. So um, this is just kind of coupled with that to give me how I feel about the market direction. Here you have distribution day calendar, and when we look at it kind of this way, um, this doesn't have every single thing on here because it's kind of automated, but not entirely clustering of distribution, so it's not something that's screaming at me. Things are not looking good. Yo, Chad, what's going on? What's going on? Good morning. Happy Saturday. All right, so with that being said, let's jump over and take a look at what actually went down when it come to the index charts. As we always do, we'll start off on the NASDAQ. I try to kind of label things a little bit more for everybody, so if you want to kind of screenshot this, like probably right there, just to give you your own kind of reference points to look at. Because like what I really try to do when I label these charts is I try to have the key levels kind of drawn out. Some of the stuff that's like dating way, way back, like something like that, I'll try to fade things out that I don't think are as important. For instance, like right now, the low of the follow through day, if we're through the 200, we're down here. Like I'm paying attention because I'm curious if we maybe, as we're declining, do we see resistance there and other stuff. But like for the overall trend, it's not that important over here. All right, so let's talk about what went on in the market. You got Monday, right? So we had finishing off last week. That's where things started to get a little hairy. We were seeing some resistance, excuse me, over at the upper end of things. I had talked about kind of starting to take some profits in some names that I had some large exposure in and that were really, really extended, especially seeing that we're seeing some resistance to the upside. Knowing that we are kind of feeling like we are going to at least pull back, but the pullback was much, much more brutal than we had really thought. We hadn't tested the 21 EMA in a while, and then we blew through that on last Friday. And I'm just trying to do this just to catch everybody up for anybody who didn't see what happened midweek. But then we kind of found that support level at the May 12th and May 19th lowish area, which said, okay, maybe this is just that pullback, a really, really rough pullback. We popped, saw resistance at the 21 and kind of finished off the week. And then, Monday, we kind of popped, saw resistance at the 21. But what really was the chaotic day was Tuesday. Tuesday, we came in, we opened like we were trying to go higher, we pulled up to the 21 EMA and just completely rejected all the way down to the 50 and then found support at the 50 and then rebounded, but then kind of stayed below those lows. So this day on Tuesday was just, it was one of those days that kind of, I really think characterizes where we are in this market. Like there's some negatives in terms of the resistance to the upside, and there's some positives in terms of this clear support at the 50-day on the downside. But nothing clear like it when we have those pullbacks and then we're seeing such clear resistance to the upside, but clear support to the downside. That's where things kind of get in that like choppy context for me, where I'm not really hammering on things. I'm trying to be a little bit more conservative. And then you can see we basically kind of chopped around sideways, continued to find support at that 50-day simple moving average, but continued to also find resistance up at the 21 EMA. As we closed out the week, again, with a very, very positive close on the weekly range, right? When you look at it on a weekly time frame, the shakeout below the 10-week moving average, the kind of rebound and closing near those upper ranges, really, really positive action. Volume lighter on this week, but really, really positive action. But again, just still some concern to the upside, which is why I think a lot of if you're following a lot of different traders, a lot of us are sitting there going like, okay, things look good. There are names that are looking healthy. The pullbacks are looking healthy. The trend, right, this is the first real test that we've had after explosive move. So you kind of expect, like, just like any stock, the faster you go up, sometimes the quicker and harder you go down. So being how insane this rally has been, I'm not entirely surprised at how violent the pullback has been. But just having those key areas of resistance on the upside that we're just running into, pointing towards the idea that there might be some more chop our way as we might kind of go a little more sideways, that intraday volatility pointing to that, and again, just making it where some new entry, some new risk coming into the market could be a little bit more of a headache. You don't want that death by 1,000 cuts if we're just constantly chopping around and you're getting stopped out of a lot of positions, which is why throughout the week I was kind of saying like maybe we should kind of tone back a little bit on the trading, and knowing that there's, as Livermore says, the time to trade, and then there's a time to go fishing, or time to go long, time to go short, and time to go fishing. And markets like this is very often you're better off kind of sitting and being a little more patient. Again, overall, what I will say though, this is the first pullback to the 50. So I'll talk a little bit about some of the things I did during the week. The stuff that I took trade wise is kind of pullback type trades, with a little bit of support and a little bit of positivity towards the upside, versus breakouts. Because of the environment we're in, I'm definitely less likely to take some more breakout trades. We're down here, right? When we got the follow through day hit in, when things are just continuing to follow through, I'll take more breakout trades type here. When we got this first pullback, or the pullback even here, I'm trying to probably get into a lot of those leaders on some sort of a pullback entry, because I found for myself it gives me a good opportunity to manage my risk. It tends to work better with a lot of the choppiness that we sometimes get in the market. So that's where I'm at in terms of what's going on in the NASDAQ. Look, key level to the downside, the 50 and that prior low on Tuesday. Key level to the upside, mainly the 21 EMA, I think, is a huge, huge spot right there. And then obviously all-time highs. You got kind of the 514 high, and then you got the high over here from June 1st. But right now, my main focus is that 21 EMA and that 50. Can we hold? We could also shake out below the 50. Like if we had like a quick little shakeout, even a one-day close below it, and then rebounded quickly, but maintained that 6.9 low, I'd be comfortable with that as well. All right, so I kind of threw a lot out there. Hopefully that all makes sense. You can look at the S&P as well. Not really too much different, except for the fact that we are over the 21 EMA when it decides to. There it is, decides to populate. Dow, Russell. Okay, so here is what also brings some positivity to me in the market, but also, again, some negativity. Look at this. Like, we're just the shakeout 21 rally, shakeout 21 rally. What the Friday kind of resistance that we saw, and like almost stalling like action as we broke out the highs and pulled back and reversed. A little concern there, but we're still trending well overall, and we're seeing that positive to the upside. So just something to add there. All right, don't see any questions on what's going on with the NASDAQ. We'll jump back over and take a look at where am I? We'll quickly look at kind of just some events going on next week. So big thing, we got the Fed meeting coming on Wednesday. Just understanding, like, I know people look at things kind of differently. For me, it's just understanding that news event brings volatility in the market. Very much with earnings releases of a stock or a major player in the market, it will cause likely some sort of market reaction. What that market reaction is, I don't know. It's not even so much that I care what the decisions or the things that are going to be talked about are in these things, as much as I care about how the market reacts to them. And that's really what it comes down to. All news, even earnings, right? We saw Oracle this week. Oracle, I didn't go through completely all the kind of earnings and look at it because it's not too much of a concern to me. But just knowing that they had a fairly good earnings report and then got hit to the downside. Again, not the news, market's reaction to the news. That's more important. We got Triple Witching Day occurring on, what do we got going on here? So we got a market holiday. So we got Juneteenth on Friday, but then we also have Triple Witching Day. I'd have to figure out why my kind of dashboard pulled this. If anybody in the chat knows how we could have the market holiday, but also Triple Witching Day. All right, let me know if you have an answer to that. Earnings wise, though, the earnings are kind of dried up. Really, not anything going on next week. It's on the screen. You can see it. Yeah, it's a holiday. It's a holiday on the 19th. So can we have a Triple Witching Day on the 19th then? Do they still have? Is there still an options expiration? Look, I'm not the brightest, man. I probably should know that, but all right, sectors. Let's talk about what's going on over here. So you can see in my kind of view right here, right? Tech still leading, energy kind of in number two, though. I think this is starting to really show some clear rotation. Um, Honestly, let's do this. Let's jump over to Deepvue because I'd rather take a look at the kind of charts on these. All right. All right. So for those of you who don't know, I am a Deepvue partner. This is a tool I use for all my stock screening, fundamental analysis, technical analysis. Love the tool. They are making some crazy improvements. Like the clarity, the speed of everything has been getting amazing. The drawing functionality, the AI stuff that they're working on in the background right now. I mean, I really can't say enough about this. I really don't believe there's a single tool that comes remotely close to the innovation that they have. On top of it, being at an actual reasonable price. Like some of these companies are still operating on this like legacy pricing where it's like the data ain't as expensive as it used to be, guys. But Deepvue understands the reality is like people can get the data on their own. So if you're not given a really, really good product on top of it, they'll make it themselves, as a lot of people have done. But really no reason to do that with Deepvue because they're taking things to the next level and their data is super strong now. They've done a lot to keep improving things. So if you are interested, as I kind of digress, link in the description, and you also have a 3-month trial code in there and a 12% off an annual code. Yes, I am an affiliate. Yes, I get a piece of that. I'm only saying this because somebody was crying on Reddit about it. But you also save money and you also get a free month. So, and I do all this other stuff for free. So I digress. All right. So let's look at kind of what's going on real quick. For the week, materials let out, consumer staples number 2, and technology number 3. There was also some talk on Reddit about tech leading, tech not leading, rotation. So if you really look at this right across here, right, relative strength, 12-month tech. Reset it right here. 6-month tech. 3-month, you guessed it, tech. 1 month. And 1 month for me in terms of trading on is the only, like 1 month is the lowest I will go in terms of a time frame, because anything lower than that to me is really looking at something too short of a time frame. We still have tech in the top 3. On the 1 month though, we also are seeing financials and healthcare showing a lot of strength. And I'm sure a lot of you have seen it in your screening. But then on the 1 week, we're getting kind of mixed tech in third, staples, whatever it is. And then one day we don't really care about. But all right. So what we're seeing is I don't want to say there's rotation yet. Mainly because if you look at what went on with tech, let's go to the 3-month time frame. If you look at what went on with tech, this has just been an insane strong move, right? And then we pull back to the 21 and paused. Healthy, normal action, especially looking at the weekly. Very, very good, strong uptrend. Until that trend changes, I consider this the leading group, as you saw within my other area. Now, the opposite, right? We're seeing strength coming into financials. Don't get me wrong. But if this was a stock, and this is the best, I do this a lot. I think about things, I think about the sectors, I think about the industry groups, I think about the overall market in terms of like, if this was a stock and I owned the stock, how would I feel about this? Like, do I want this? Right? Do I want this that's gone on a really big run, pulled back, shook out below 21 EMA, and then looks like it's trying to rebound? Or do I want this, which looks like it might be trying to turn around? It just got above its 200-day simple moving average. This is where I think, yes, could there be possible rotation coming into the market? 100%. Do we have really much of an answer? No. Am I paying attention to financials? Am I paying attention if there's really, really good, strong setups in the financial sector? Would I be willing to take a trade in that area because of the strength that it's showing in the short term and because of the fact that that trend change is looking to be happening? Yes. Would I say that there's a rotation completely out of tech. Absolutely not. Definitely not. Real estate, right? Real estate. Here you have the weekly over here, right? Still kind of range bound. And we had talked about this last week. Like, look at even healthcare, really, really strong, right? Feeling really strong off these bottoms, but it's just getting above its 200 day. So there's strength and there's maybe some short term rotation, but I don't believe that I can confidently and say like there's rotation out of tech. The trend is what matters most to me, not necessarily the 1 week or 2 week action. And when I'm looking at these trends, right? Industrials, very, very tight. I mean, industrials looks great. Industrials looks healthy, right? We have this pullback, hold off the 200 day, pulled up. We have tight action. Things are just kind of sitting ready, looking like it's about to break out to all-time highs, but not something there. Consumer staples. Like a lot of these sectors are kind of range bound. Where tech is just the only one that's clearly leading. The one thing I will say is energy does look like it's just in that choppy sideways action, while this was a prior leader, right, all the way back to the end of the year. Real strong prior leader towards the end of the year. This is kind of one of those areas where I'm kind of sitting sideways because it's gotten choppy, right? And that's the difference, right? Here, I would not have said, oh, energy is taking a nap and rotated out of. Once it started breaking down is where that kind of gets confirmed. So we're not trying to predict. We're just trying to basically act off what the market's doing, but you don't want to get too in the weeds because it's just going to create too much noise. Like I'm not worried so much about daily strength. I look at it every day to have a feel for the market, but I'm not acting on that single data point. Utilities, communication. So again, look, I think it comes down to this. Like tech is leading. Tech looks strong. Tech has moved this market. It appears that tech is acting just completely normal and healthy. Could that change? Yes. Am I making any changes in my trading decisions right now just off of the last 2 weeks of this pullback and moving away from tech? No. Hopefully that answers. All right. Let me see. SAG. Just check the options expiration calendar, monthly options, June 18th, Thursday to June 2nd. Okay, cool. All right, so that's going to rotate. So that triple witching is now going to be on Thursday versus on Friday. Thank you, SAG. I appreciate it. SAG, you might be like Joe Rogan show has Jamie, for anybody who watches, going out there and getting all the answers while I'm just talking my head off and you getting the real data. So thank you. Appreciate it. Liz said I couldn't sell any CCs for the 19th. Okay. I mean, the 18th. Okay, perfect. And then Liz said, yeah, TradingView makes you pay dollars for a number of it. Yeah, that's one of the things. Like, obviously, you see that I use it for the indexes, but I don't pay for it. But yeah, once you start getting into like putting more than one indicator, once you start wanting alerts, like they upcharge you on everything, which is absolutely ridiculous. And I think that's like that, like, we'll give you a little bit and it's like, oh, this really isn't bad. And then every trader starts going, well, I need another watch list. I want to organize these names. I want this. I want different indicators. I want more alerts. And then next thing you know, they're like paying out the nose. Try not to curse on here because I don't know who's watching, but for it. So yeah. All right. Back to what matters. Back to what we really need to talk about. Let's talk now about industry group stuff. Let's jump over and look at my industry groups. So same thing here, right? And this is the big thing I want to talk about, I guess, this week is like the idea of rotation and the idea of what's leading versus what's pausing versus what's breaking down. And that's kind of the best way to think about it, right? Nothing, just like a stock, goes straight up. And you don't sell a stock or abandon a leading stock just because it's pulling back and having completely normal, healthy action, and then go into buying something that's in an overall downtrend, but that just happened to pop and show strength, right? The same thing goes for the overall market. The same thing goes for the industry groups. The same thing goes for the sectors. So if I'm looking at right now, you guys can see what I have on my industry group rankings. think I told you guys I did add a couple of groups. I did update some things. Look, semiconductors, it's just the memory is just still number one. There's like no question about that. Um, excuse me. And a lot of these other names are kind of acting healthy and normal or rebounding from pullbacks, things like that. Um, but from what I'm seeing here, like what stands out to me still, I'm still paying attention to AI. I'm still paying attention to all the semiconductors. I'm still paying attention to the optics and the photonics. Um, Satellite, crypto mining. Actually, this weekend I'm going to do a little more deep dive into some of these names that fall within that crypto mining kind of space. These top names are the ones that are actually dictating where it falls within that ranking, and the bottom ones are just kind of like a hey, if these are doing well, look at these, but don't actually pay any value to what's going on in terms of the ranking. So, AI, energy storage, like a lot of these groups, kind of focusing, continue to pay attention to them. So you guys can see all those under there. Now, what I do want to look at here is the weekly leaders, right? So even on a weekly basis, we did have semiconductor equipment showing strength, and I think a lot of people are looking at some of those names. Actually, here, we'll pop back over here. So I think a lot of people saw, like, I know these were looking kind of interesting. I know some people buying these names, like a lot of these names, I think a lot of people are watching throughout the week. So feel free to screenshot that as well. But yeah, that was definitely one of the leaders for the week. Semiconductors, memory, SanDisk, MU, all those names continuing to just pull back and lead. Okay, crypto mining did have a strong week. Brokerage platforms, some restaurant stuff. So nothing too jumping out at me right there. And then the bottom stuff. The drone stuff got hit for this week. The space economy, I think a lot of that was kind of people unsure how that market or that area was going to react to the SpaceX stuff. Some of the software stuff not acting as strong as it was. So you guys can kind of see what happened for this week. Now let's talk rapid movers. So this is where we are starting to see like some of the names that are accelerating, right? We've talked about some of the healthcare, some of the other areas, the possible rotation. Again, the same way when we were seeing some of these tech names accelerating while semis and AI stuff are leading, and we saw other stuff starting to accelerate, like quantum, like drones and things like that. I wasn't running to buy those off of just that pure acceleration. It's just bringing my attention to that so that I could say, this is showing some strength. Let me see, is this a confirmed uptrend? And when you think about trading, when you think about Bill O'Neill, Stan Weinstein, a lot of these traders that are trading growth stocks trade, they want the confirmed uptrend, right? They don't want that small little blip in a downtrend. They want a confirmed uptrend and then that first kind of base pattern forming. It's the same thing. I'm doing the same thing with the industry groups. I don't want to buy something that's below its 200-day simple moving average and it's just rallying off of bottoms with a ton of upside resistance. I want to see the confirmation of the uptrend because that's confirming big institutional money is going into that stock or into that industry or into the market. Then I want to start picking out the leaders and doing that. And the idea that you're going to miss things, like, yes, it could happen. It can happen. But like, and we'll talk about some of the names that ripped off the bottom, the quantum names, the drone names, the names that a lot of us have been really like watching. And I personally haven't been buying yet. A lot of these names pulled back. A lot of these names are starting to possibly form bases or even break down. So again, other than that, you can kind of see what's on here. Nothing that's screaming at me that's like, oh, wow, this deserves some major attention. But you guys can see that kind of there. All right. Before we move on, any questions? Anybody got anything going on with industry group rankings or sectors or groups that they want to look at specifically? Throw it in here. There's a little bit of a delay, so I'll let people type for a little bit. And then I'm going to move on. And if I have to, I'll pop back into here. All right. While I let people possibly type some stuff in there, first I'll kind of break down what was going on with my portfolio this week. So a lot of people know I talked about daily, right? Okay. I talked about selling into some strength kind of back here. This was just getting super extended. This was just getting very, very extended. Like at the peak, we're talking about a 40%-ish drop down to the 50-day simple moving average. We did just break from this kind of area, but again, part of it was also the market, and part of it for me was that I was just very heavily exposed in this name, as I was in MU. Like the majority of my portfolio was sitting in SanDisk and MU, so I was trimming into the strength. And then within a few days, we did get that pullback. And now I know people say, well, okay, we hit the 21 and it continued. So some people that know me may say, well, don't you normally trail the 21 after you kind of take your first profits like I did here? Well, the thing was I added here again. So I got super, super heavily exposed in this name. And now I realize that let's just say even at here, we're looking at almost a 20% pullback. And over here, let's just say right around here, yeah, we're looking at a 10% pullback. And I just know myself. When I'm that heavily exposed in a name and a normal healthy pullback is at least 10 to 20%, that's going to be a huge equity hit and it's going to pull on the emotional strings. So why not take profits into strength? And if we do get those pullback and tighten, you could always add. Now, I didn't add in these situations, partly because of the choppiness I was expecting to have in the market, but we did have SanDisk kind of break out to all-time highs, and we do have MU hovering right around that 10-day simple moving average. So in terms of my new buys, the first one was Credo. This is exactly what I was talking about, right? You had a group in terms of cybersecurity that was really moving sideways and downtrending, that was below the 200, that broke and just went on a complete and utter tear, up 81% from this kind of bottom right over here. So a lot of people's eyes kind of looking on here, but no real opportunity to get in. And then we had that first retest, that first pullback right into the 21. And on, was it Wednesday or Thursday? I forget what exact day. Basically retaking that 21 EMA, starting to take out, I think it was on Thursday, take out the prior day's high. I put a small position on, because this was a leader, and I know that these names have all trended together. They're all showing a lot of relative strength. You can see it kind of up here. So I'm not going to buy something down here. There was no reason to. But now that we've got that big uptrend, now that we're above all those moving averages, now that everything's kind of trending healthy, this is my opportunity to kind of jump in on there. BE, this name has been a little bit of a headache for me. It's had some really nice tight action, but it's kept breaking out, failing. It shook out below the 50. So what I'm looking at here is, right, we had these clear levels right here. We kind of shook out right there and reclaimed over here. So I'm hoping that this was enough to wash out those weak hands. We have a line in the sand right at the 50 and the prior low. And then now it's just, did we shake out enough people on this move that the sellers are dried up and we could kind of trend higher? Small, I think, position that I put on. I forget the stop exactly percentage-wise the equity was, but not a ton of risk on that one. And then Twilio, this was one of those names that I was able to buy right around here on the 21 EMA. It took off. I then got kind of stopped out of this as it broke down and things got pretty rough on that Tuesday. But then I was able to, I bought right back in within, originally it looked like a tight inside day. So kind of taking a little note out of my buddy Shake's book, hoping that this kind of gets that Monday morning skyrocket off of there, but also another tight stop, small position. So that's kind of where I positioned myself for the week. All right, SpaceX, let's talk it. There it is. Okay. Look at that. All right. Let's do 5 minute. Let's do the 5 minute chart. So, look, one of the, and I have that book for behind me, somewhere in that massive stack of books that are behind me that nobody can actually see. They're actually somewhere over in here is Eve Bovich's Life Cycle Trader, I believe. Kathy Donnelly. Oh, it's right above. You guys can't even see that. It's right above Marty Schwartz. The orange book. It's right above that. But still, look up the Life Cycle Trader. Great book for talking about kind of the life cycle of a stock. Talks a little bit about the IPO things, but you have to have a strategy getting into something like this. Historically, right, most of these IPOs, especially those high-profile IPOs, they tend to show a lot of strength right out of the gate. The first like couple days, couple weeks, couple hours, then they tend to retrace, and then they kind of move sideways and just lag for sometimes a month, sometimes a year, sometimes up to 3 years. While the big institutions want to see all that volatility shake out, and they want to see what exactly is this company doing financially. How do we place an evaluation on what this company is worth and what we're willing to buy this at? So I don't see even an intraday kind of entry on something like this. To me, it was just, you look, if you want to play that game, you play that game. But I think most of us really should be like, even, I mean, look, you could say, oh, if I took it out the 5 day, I was up. Oh, wow, what? You're up 9%. And then you ended up closing out the day basically flat. So more risk than anything in something like this. So for this, it's a wait and see. There are going to be times where you get, going back into the archives of my brain, stand by. We are going to get IPO stuff, right? Yeti. Isn't it crazy how, as a trader, I could tell you exactly where I was, where this event occurred, right? So, I've traded IPOs like this, right? We had this kind of almost like a VCP pattern, and I believe I bought it on this day. And then right here, I could tell you exactly what I was doing. I was up in Vermont at Mount Snow. And this thing took off. And at the time, my mentor was blowing up my phone. And he's like, I would probably lock in some profits. This is a pretty big day. I know you own it from, I think it was somewhere around here. You're up 20-something%, lock in some profits. And then it rolled over. And while I was at the mountain, I got stopped out and got nothing out of this. But sometimes you'll get these short kind of patterns that form. But again, then you're going to sometimes move sideways. In this case, it was a couple months. And then you have sometimes like a Facebook. Let's jump to, I don't remember when Facebook IPO'd. That's not Facebook. It's not Facebook anymore. Idiot. It's Meta. May 12th. May 2012. And daily. Okay. That didn't work because I switched. Bear with me. Shake's book is Pinpoint Trading. Let me see if I can bring that up, actually. Can you guys see this? YouTube. Not YouTube. Pinpoint Trading, Amazon. All right, there you guys go. So, really, really good book. We had talked about this a little bit in Discord. I think especially for the CANSLIM base trader looking at getting in towards swing trading. I think this is really, really good, and I like a lot of his philosophy. Kind of does it full from everything that you kind of want to cover from a perspective of swing trading, especially growth stocks. So, Liz not touching that. Agreed. Okay. So, all right. Sorry. As I see if I can go. Okay. Ready? So, here's a prime example of what a lot of these high profile names tend to do if you study a lot of these names. You have Meta, right? First day, big up day. Didn't have the close that we had on SpaceX, but then completely crumbled, completely collapsed, and then went sideways for a very, very long time. And if you were somebody that happened even to buy here, you went almost over a year with dead money just to break even. And then from here, it took, let's just say, even your break even was here, right? To even have some sort of a gain from that point. It was a 30% gain only to retrace and basically go back. So before you really started to actually sustain money for those buy and hold type of people, sustain some sort of growth, even if you just say bought at around the open, it took, shoot. Where am I? I don't want this. This is what I want to get rid of. Okay. Let's just say you bought at the open. It took you to get profitable over a year. Over a year to get profitable. And look, there's a lot of money. There's a lot of other things you can do with money than sitting with something down 65%. So you put 10 grand in this thing, you're down $6,500 on that position. You know, it's 65%. And then all that money's just sitting doing nothing. And then it starts to kind of make its way up. And then like, you know, you're barely like, oh, I'm up 30%. And like long term, yeah, okay. If I was to buy and hold, but like there's a lot of like 20% dips. There's a lot of look at I'm gonna be honest, just look into if you have any idea of buying and holding something and as a trader, there's a cost opportunity for doing something like that. And you don't know for sure how these names are going to act. You know, tell somebody that they're going to buy and hold when you got, and they're going to be able to stomach an 80% drop in their position. Yeah, sure, it rebounds eventually long term, but like this is where our traders outperform the market is because we are not holding things for huge losses because there's an opportunity cost. So going back to SpaceX, and I apologize for my ranting and my kind of being all over the place today. If this is going to be a big leader, there's going to be an opportunity to get into it. Like, there's no need to dive in it now and have dead money sitting, especially when you have names like this. When you have names like this, when you have names, I mean, just any of these big names right now that are performing very well. You can have your money working for you. Compounding is huge. So versus gambling, because it's the other thing. Some of these names that everybody says they're not going anywhere. This is game-changing company. They fall apart and they're nothing. So you're not gambling. You're trading. All right. Rocket Lab, bring that one up. Really watching this. For me, the big thing right here, right? We're in a clear sustained uptrend. We had this earnings gap right here that I missed out because I was buying around in here with some nice tight levels. Earnings was coming up. I did not have any cushion going into earnings, so not taking that gamble. It did hit. It did take off. It did make a massive move. I never gave an entry. Is what it is. There's another names that made me money. I'm not crying about it. Now what we started to see though is, which we knew it would happen eventually, is we'd get that pullback. We're seeing this nice flip from this resistance of the base pattern to the support of the base pattern. along with the support at the 50. Am I looking to buy something like this off of support? No. Personally, no. Now to me, I'm wondering, can we get a base pattern out of this? Can we get more of a traditional setup out of this? I want to see some sort of a idea that this trend is resuming. Ideally, if I had to like paint a perfect picture of, I probably should have, if I had to paint a perfect picture of what I would like to see. Where's my highlighter? It would be something like this, and then something like that. Or, you know, how just higher. I want to see some sort of a first higher low, and then maybe some tight action for me to get in on something like this, or some sort of a more defined like trend line into tight action into the 50 and just somewhere else versus buying this just dropping off that much. That's where I personally am looking at something like this. Could buying off the 50 work? Possibly. But that's how I'm kind of looking at this. Now, I know you'd be saying, well, you bought crowd. Oops. You bought crowd off of that pullback after a big run up. Well, difference was I feel like crowd pulled into 21, not to the 50, and crowd also is way above where that support to base support from a foot from resistance support level is. So I'm looking at this a little bit differently. All right. ASTS. No. There we go. Yeah, very similar pattern. I mean, to me, this doesn't look as strong. It hasn't. It's kind of been the laggard of the two, in my personal opinion. You got a lot more chaos, a lot more chop, and a lot less clean, right? Right. We're looking at this. Think about if you were even to buy on the reclaim of the 50. Like there's people here, there's people here, there's people like there's just so much upside resistance with the Rocket Labs, with all my chaos on the chart. It's just not as this is what I wanted. It's just not as choppy, and there's not as much resistance in terms of people that could be selling as they get some of their lost gains back. So Eli Lilly, that's another one that a lot of people have been talking about. Yeah, look, another one of those big base pattern, right? If we look at it on the weekly, we have this kind of base. We kind of broke out. Looks nice. And then what I like seeing here, because I like to look at the daily a lot, is again that flip support resistance. Resistance, in general, just resistance at these levels, resistance, break, support. So really like this, really like the tightness here. You could argue this isn't the high tie flag, but just the rally, reclaiming all those moving averages, everything's starting to trend up. And then we got this tight action right at those highs. So this is a very, very interesting name. A lot of people know with all the freaking drugs that that are being peddled around the U.S. Obviously, some of these being life changing and health real saving things. Some of these being, I'll be honest, I think more vanity stuff that people are buying and they're making money off of. But combination of both, the company's making great earnings, making great sales. It's got a lot of strength. It's in an uptrend. The relative strength or the absolute strength in terms of Deepvue isn't truly there. But with healthcare starting to turn around, this would probably be the number one name I'd be looking at in the healthcare-ish space. Let's see. Same interesting Lily. Okay. If you like to get the bottom of the high tight flag, it kind of depends. Like this is a lower ATR name. Higher ATR names, it's harder to kind of judge on to manage risk when you got something that's like just whipsawing really, really rough. And like I know that like a breakout and then like I need to have like an 8% pullback just or 10% pullback. And I could still be in like a normal healthy pattern. Where like a name like this, it's not as volatile. So even from peak to trough, like that's a 5%. Like I'd be willing to buy something like this if it was to keep going sideways, maybe a little bit more a on a breakout type buy. And I don't really feel like I need to get in the bottom of, again, not, this is not, definitely not, I wouldn't call this a high tie flag, but in the bottom of this kind of Darvis box that is after this big run up above the base. So hopefully that answers the question. All right, what else we got? Rackspace. All right, it's very, very small cap. Huge, huge ATR. Just for that, I'm kind of not really truly interested in something like this. I don't see the earnings. I don't see the sales. I guess you don't see the institutional sponsorship. To me, this is just a hard pass. Like, why this name is my big thing. Like, I get it's gone on this big run, but like, it's a volatile name. It's just not my. It's not my game. Not my game. If somebody else trades stuff like that, then maybe they could kind of elaborate on their thoughts on that, but just it's not my game. Another really, really small name. I don't like trading these very, very small names. And look, it's just these ATRs are yes, it's great to the upside. It's also rough to the downside. So it's possible, just not my thing. Stuff I try to stay away from. Tilly's. All right, so this higher ATR, but this, see, I love this pattern. We also have earnings. We have sales. Decreasing in fund. Not great there. From a technical perspective, though, inside day. A little extended. I see what you're looking at. I like the technical action. I love this kind of basing pattern. I love that it tightened up right around those moving averages. It bounced and it's kind of flagging a little bit with some really, really decreasing volatility as it's moving sideways right beneath those highs. I love it. I just ask myself, is this the best merchandise out there, right? Ideally, even if you're trading millions, we're not holding like over like 10 names. Is this one of the top 10 names that you want to be participating in this market with the highest probability of success? I don't see that. So for me, it's pass. Intel, given that double bottom right there. Very, very short double bottom. Right? It's only like 1, 2, 3, 4, 5, 6 weeks. But Intel with a double bottom pattern. So we kind of didn't want to break out. It's just hanging below that breakout level. What would be really nice is to see it tighten up just a little bit right here. Give a real tight entry. But no, I think this is one of those names, 100%. Look, you got 3 month, 6 month, 9 month, and 12-month RS is great. 1 month, not so great as it's been moving sideways. You have the earnings. The sales aren't really there. This is a bigger cap name, $626 billion versus that $1 billion name we were looking at before. We got the institutional sponsorship. We got the leadership in terms of the group. We got the stage 2 uptrend. We got a nice 20% drop, a little over 20% drop on the base, a double bottom pattern, and then we're right beneath that kind of double bottom breakout. So, yeah, I think this is definitely a name that people should be paying attention to. As you can see, it's on my watch list with that little blue kind of ticker that I got there. This is the stuff I prefer to trade. You know, leaders, groups, good fundamentals, solid chart patterns all together. No reason to just trade something like purely off technicals like this when I just don't think it's a leader per se. Where this to me has more of the opportunity leader. Now look, I mean, there is argument, right? There is argument. Well, the relative strength is great. You do have earnings. The sales, like I said, I don't. This is not great sales. You are starting to see earnings. You're starting to see this thing turn around. But look at that. Like, it's just not. Look at all that upside resistance. It's got a ways to go, and it could be rebounding, but it's just better merchandise out there. Much more interested in Intel. What else do I got on here? I gotta clean this up. Gotta clean this up. There we go. Talking about those equipment stocks making moves. Not that I own it. Taiwan Semiconductor. I own this. I took a small profit and stepped aside. Oh, this I'll bring it up. I had sold this with how the art market was acting, with earnings coming up here. Took like a 10% gain. We got a nice strong move, but then a really bad reversal and a breakdown. Hindsight, I'm kind of actually glad now how this kind of shook out that I ended up just taking that 10% profit and calling it a day, because after this big move, this rough reversal, I would have been like, all right, maybe I would have taken some profits, but then I probably would have held a little bit of it, hoping to see it kind of move sideways, and then it pulled down here, and it would have eliminated my gains. So me just talking, but DigitalOcean, I'm really watching this name. This has been another one of those names that you guys know. I think I'm like net negative on my trades for this thing for the year, and sometimes that's just what's going to happen. But yeah, this has been one of those that's been hard for me to kind of make some profits on, based on how it's active. But I'm still watching this, watching the drone names. This started to kind of collapse. This doesn't look too great. Possibility of like a shakeout, but also a possibility of just hitting resistance to the upside. This I'm not interested in trading. I'm just kind of keeping an eye on. But then you got those semis like this. I bought Crowd because to me Crowd looks stronger, right? Versus a Snow. But I see what people got going on with Snow. So I still got to do my routine for the weekend. I still got to kind of go through and really try to find possible trades and possible setups. And a lot of this, because I was not here last weekend, was some of my older list stuff. Just trying to flip through while we're here. Which drones? So, all right, we can kind of flip. Where's my button? There it is. I have my drone names. You know what I can do? Sorry, this is all locally hosted, so it's a little slow. Drones. Wasn't drones over here? 160 and 167. All right, so come back over here. I have a search, but it just to be doing the search live, it's a little slow. So we'll scroll down. Again, I'm paying attention to the drones. I'm not buying something that's this far down. And it has started to lag. But this is just defense tech and drones. And then this is some other drone stuff. So, think you didn't like the RCAT chart, if I remember. All right, RCAT. Oops. Did I just lose that? Yes, I did. Okay, there we go. RCAT. So, with this, let's look at the weekly. Super volatile, right? Look, the sales are ridiculous. But the big thing here, right? We're below all the moving averages. We're this is just a very choppy name, right? The ATR isn't ridiculous, but we're just very sloppy. There's like no real true pattern in a name like this. So for a trade, like, yeah, like there is some big rapid moves, but just not clean. It's not the kind of stuff that I like to trade. I'm watching it because I understand, and this is sometimes what'll happen too, right? Sometimes you'll see technology from like a CANSLIM perspective, the new in CANSLIM. You'll see like, okay, do I think drones are going to have a huge impact in the world? Yes. Do I think right now that from a technical perspective, these stocks are giving a good setup for me to trade them? No, not many of them. So I'm not sitting here making trades or bets based on the future of what I think that technology is doing. I'm doing my trades based on what the market is telling me about this. The market is telling me right now that like there's a lot of chop. There's a lot of weak hands in here. There's maybe some strong, but like I want to see pure institutional sponsorship when these big institutions, the pension funds, the big hedge funds, the just those big institutional money that moves the market. When they are buying into something, I just want to ride their coattails. Right now, looking at this, I don't see that happening. Right? Let's look at Hood last year, right? Clear trend upwards. And this was also one of those names that were like outperforming while the market was in a downtrend. And really showing a lot of strength in the early phases of the market, showing me that that's where institutional money was kind of going. SanDisk. Clear institutional money going into this name. Multiple 100% moves in an uptrend. MU. Same thing. A-Lab. Last year. This year. Credo. I mean, there's just like those traditional names, again, from a CANSLIM perspective, that have the sales, the earnings, the institutional money coming into it. It's trending. It's just giving me all the probability. I don't know who had a chance to check out. I was on Alex Marenko's monthly group, which I'm going to be doing this Wednesday as well. And I presented a topic which I called stacking probabilities with CANSLIM. And it was just giving you a mental twist on CANSLIM trading and thinking about that as the whole process of our trading strategy is not a finding the answer or finding if the right or the 100% winner. It's just looking at all these criteria and everything that falls into the CANSLIM criteria, everything that shows you good earnings, good sales, institutional sponsorship, new products, industry group trending higher, market trending higher. Every time one of those boxes is checked, you're increasing the probability of that trade working out based on historical data. That's what it comes down to. Then you take all that information, you pull yourself into a pool, a bunch of stocks that fall into that category, and then you use the technical analysis to confirm that the market is agreeing with what is being seen in all those other criteria. And then you're using that technical analysis to enter with a good risk management approach. Because even with all those things, even with your edge, you're still going to be wrong very often more than you're right. And that risk management approach allows you to be in a position to be wrong many, many times and only be right a couple of times. And that time you're right tend to be right and very right. And that way overpays for your losses. That's what it comes down to. So all the things that I go through, my top-down analysis, I also do some bottom-up analysis. Everything I'm doing is trying to put myself in a high probability situation on a trade. And then my risk management is putting me in a situation where if I am wrong on that trade, I am only risking so much. And if I am right, I am making multiples of my risk, and extrapolated over a time frame makes you successful, makes you profitable, and makes you outperform the market is the big thing. So another rant. Very rant. I always rant. I don't know why I'm saying today. I always rant. All right. What else we got? What are you guys thinking? I'll leave the chat open. I'm going to do a little bit of a kind of summary of where I'm at right now. And then I'll feel free to put some names in there. I'll jump back over. So, this market, things look positive. There is still some concerns. As you saw, I'm willing to slowly add some risk as we're continuing to see support. But I also understand there's a high probability of some chop happening. Some of those names that look like they're holding some key levels, I'm willing to take some small trades there Because even if we do chop, I think it should be more of a sideways move. It should be stopping me out in that kind of situation. But needless to say, I'm not looking to add a ton of new risk every single day. I'm not looking to go from 50, 60% invested to 100% invested or on margin in just a day or two. Like I've done throughout this week, it was just like add a position, small amount of risk, add a position, small amount of risk, add a position, small amount of risk. And even where I am right now, I'm kind of even sitting back a little bit more, knowing that there could be some volatility, some chop. But we could also look. This market's been strong. This market has proved that it could just completely rip, and this could have been a really rough shakeout and a really, really volatile recovery again. And and this is really where it comes down to. I'm positioned in a way where if I get stopped out of everything, I'm completely comfortable with the risk that I have in the market. And if this market goes on without me, it goes on not without me, but this market takes off from here, I feel I'm positioned in a place where I'm participating enough where I'd be happy. So I'm kind of comfortable with the outcomes either direction. That's I think where you have to position yourself. If I get stopped out of a bunch of things right away, like I'm going to really reduce my trading, really let things tighten up. And I think that's where you get some of these traders like Minervini and a lot of other styles that will say, all right, look at my past trades. If they're working, I keep pushing. If they're failing, I pull back. And that's a way of going at this. At the end of the day, a lot of us are doing something very, very similar. We're all doing it in slightly different ways. Some people look at it from bottom up. Some people look at it from the top down. Some people, like myself, look at it both. Some people use the market to dictate their risk. Some people use their trades to take their risk. I do both. There's just a lot of different ways to go about this market. Hopefully, you have your kind of setup defined. All right, Riot. We'll jump back over. And this is, I believe, the Bitcoin stuff, right? Yeah, Bitcoin mining. So, yeah, this is like Riot, Hut. All these names looking good. In terms of Riot, and this is, again, where I can kind of fluctuate. So, does this have the great fundamentals? No. Has this group kind of been showing a lot of relative strength throughout the last couple of months? Yes. Do I feel like it is now resumed and in a clear uptrend? Yeah, look at Stan Weinstein stage 2 uptrend above all the moving averages, making new highs. So I think from here, we're probably a little bit extended. Let's just see exactly. Yeah, from here to me, this is a little bit extended. But yeah, these are names that I'm paying attention to for sure. Yes, World Cup. We got a lot going on. We got the World Cup. We have the Knicks. As a New Yorker, I'm not a big basketball fan. I'm not going to sit here and bandwagon. I've just never been a big basketball person. Still crazy to see a New York team, the Knicks, and if I had to pick a team, it would be the Knicks, doing so well. So hopefully they win tonight. And then you also have UFC 250 at the White House. Very obviously politically polarizing thing. But as a UFC fan, the fact that they might be fighting in the rain is going to be sick too. So super big, eventful weekend. So go Team USA. Go Knicks. And yeah, I don't know. Whoever you guys want to see win some of these fights. It's a very, very good card. Very, very good card. So all right, that's all I got. As you guys know, there's the link on the YouTube, there's the X, and then there's the link in the description. If you don't already, please, if you've gotten all the way to this point and you're not subscribed, subscribe. It just helps push this out to everybody. Look, I do this for free. I do it because it helps me as a trader and it's fun. And I hope I can help somebody out there. The Discord's free for the exact same reason. My X, I don't have any paywalls behind my X. Everything I do is free. The only thing that kind of gives me a little bit of a kickback is the Deepvue stuff because I use the tool. I like the tool. And if you want to try it out, I'll give you a little benefit and then I get a little kickback. So, but if you subscribe, it does kind of make these much more fun because I will say last year when I had nobody in here, these were just me talking and kind of boring. And now getting to see some interaction through the chat makes this much more fun, makes this much more helpful, I think, for me, you, everybody. So I appreciate it. I thank everybody for joining. Like I said, YouTube description's got all the links for everything. And other than that, that's all I got. And stay